Welcome back. The Federal Reserve set to kick off its annual economic policy symposium in Jackson Hole. That'll be later this week. Joining us with what to expect is former Philadelphia Fed President Patrick Harker. Patrick, good to have you. There is some expectation we're not going to get much of anything given Warsh's reticence. What are yours?
Yeah, so he does not like forward guidance, that's for sure. He doesn't put a dot on the dot plot. But I do think he has to address the three elephants in that room. It's not a very big room, but there are three. One is clearly inflation. He's got to say something about this. He can't just keep saying, we're committed to bringing it down. That went over poorly at his last press conference. He's going to have to address it. He may not give forward guidance, but he's got to say something. Second, he has to talk about what's going on in the Treasury market and the limits of what the Fed is willing to do there. That's really important. And third, the biggest of all the elephants in the room, we got into this situation in the Treasury market because of the fiscal situation we're in. And, what we're doing right now, what Secretary Bessent's doing right now, is that buyback is building a bridge. But, somebody's got to actually build the road to solve the fiscal problems.
Yeah. All right. Well, you say he's got to answer these three questions, but what if he doesn't?
Well, I think the markets will react again. That's what they're expecting. They're expecting something on at least two of those three, and I would say all three.
It comes also, Jackson Hole, it feels like an inflection point in terms of the strategy between Treasury and the Fed. I think Bill Dudley had a nice piece titled this morning, quote, "The Perils of an Interventionist Treasury and a Passive Fed." How does that change the calculus of what we're going to expect to see later this week from Jackson Hole?
Well, the Fed should be, and I hope they are, consistent. You can't be in the business of, say, getting into the buyback program, which some would label QE, but it isn't that. At the same time, saying you're going to go fight the good fight on inflation. At best, they need to hold rates where they are right now. We have not solved the inflation problem. And there are going to be some of my former colleagues who will want to raise. As we saw, we had 3 dissents, but 2 others have come out publicly and said they wanted to raise. I understand their position. And so he cannot be buying treasuries and at the same time trying to say he's tough on inflation. That doesn't fly.
Are Bessent and Warsh sort of on opposite sides here? And I'm curious as to whether you could posit any guesses in terms of the dynamic between those two right now.
Yeah, I can't. Honestly, I think Jay's just taking a back seat, trying to just be a good citizen. Let the new chair be the new chair. He's not trying to be a shadow chair. I'm pretty sure of that.